the Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. You're listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. And as it says in Matthew 6:34, so don't worry about tomorrow, for tomorrow will bring its own worries. Today's trouble is enough for today. And to discuss today's troubles, we've got Danielle Park of JugglingDynamite.com. Hello, Danielle.
Hey, how are you, Kerry?
Great. So talking about the trouble du jour, we still got Cyprus on the plate. There's so many misunderstandings about exactly what wound up happening here. Not to mention, it just so happens that the president's relatives managed to get 21 million euros out of Cyprus into the relative safety of London right before it all hit the fan.
Right. There was that list circulating late last week. Was it 132 people that had a heads up clearly because they removed tons of euros out of the bank in the first 2 weeks of March? And then you've got the news that while the banks were closed, a bunch of the Russians, the large deposits, figured out ways to make transfers under this loophole of foundation money or, anyway, just basically, the little guys left when the doors open and there's hardly any money left in the bank. It's a pretty sickening whole chapter.
Yeah, but does it really surprise you?
No, unfortunately, it doesn't surprise me. What I think is interesting is that this has really crystallized for many people who have been sort of unaware or living in la-la land about the reality of a fractional-based banking system, because even in the Canadian budget last week there was a provision talking about this idea that there needs to be a bail-in regime for systemically important banks, and of course coming in the midst of the Cyprus fiasco that's going on, a lot of people were sort of like, wow, why is the Canadian government talking about bail-in? Could there be any liquidity risk in Canadian banks? Well, the answer is, of course there could be. There always is. But what I found interesting is that's actually not a change in terms of the law, because the bankruptcy law in Canada provides specifically for securities firm bankruptcies, and it talks about the pecking order in terms of who loses. If a bank becomes insolvent, it's the same as the U.S. structure essentially, where you have first of all equity holders, they're investors in the bank. If there's a bank becomes insolvent, they lose as necessary and all of their investment if necessary. The second line of defense is the bondholders. The junior bondholders lose first. After the preferred shareholders, junior bondholders, and then senior debt, that gets written down as necessary. And then if there's still not enough liquidity at that point to pay out all the people who have made deposits to the institution, you start going pro rata. You go on how much capital each person is allowed to get back based on what capital is left in the institution. That's the orderly resolution of a financial institution. And so the bail-in concept has always been there. That's why there's deposit insurance, to say that you can have, for example, in the U.S., it's been $250 for the last few years. If you're about to get a haircut, but your first $250 of cash in the institution will be underwritten by the FDIC. So, in Canada, it's been the same. We have $100,000 of deposit insurance. So I think that the only change here, again, what the Fed said in Canada last week isn't a revelation or a new policy, but I think it's somehow them trying to underline to probably Canadian citizens who are using the banks as well as the banks themselves to say, listen, we will not be able to bail out too big to fail institutions if we get into the next leg of financial crisis in the world. The government simply don't have enough money. Canada certainly doesn't, and we certainly don't have. You had the Federal Reserve with a capacity to do all their quantitative easing to the tune of a few $1 trillion. Canada certainly doesn't have that capacity in our federal banks or in our government. We just don't have enough capital to backstop in anything as dramatic as that. So I think it's just governments trying to draw a line in the sand, and that's what they did in Cyprus. Eventually the EU blinked and said, the ECB blinked and said, wait a minute, we're going to have to stop this idea that everybody can be bailed out, and losses are going to have to start being taken.
Yeah, exactly. And the thing about Cyprus was the initial plan was to breach the small depositor guarantee, which is really, it's sacrosanct. And the one thing you have to understand if you have any money in the bank is the bank doesn't have your money. Under fractional reserve banking, the bank is bankrupt. And the whole reason ostensibly for creation of central banking was to act as the lender of last resort. So when bank runs occurred, the bank could simply call up the Fed, call up whatever, the Bank of England, and say, hey, send us 150 armored cars full of currency we have to pay off. Now they would give them a digital line of credit, whatever. And that's why these central banks came into being, because in fractional reserve systems where you don't have 100% of the depositors' money on deposit with your institution, should there be a confidence undermining event, as what happened in Cyprus, they're not going to have the money to pay you. And therefore, that's why you need Big Brother to come in and help with it. And if there was 150 banks suffering bank runs now in the United States, the Federal Reserve would step up because the FDIC doesn't have the money, and they would give them advances. Now, it used to be that they had to have good collateral in order to get that loan from the Federal Reserve, and the Federal Reserve actually looked at it and tested it to make sure. Nowadays, the Fed just writes the check.
Well, and the thing that changed about this system in the last 30 years is that was the system that was set in place in the 30s following all the bank runs and insolvency and loss of capital that people suffered. So they set up these things like capital ratios that had to be maintained because it gave a greater buffer so that in times of crisis there was more investor capital in the institution than just pure deposits. But what you saw over the last 30 years as you had the capital structure disintegrated as people became more and more aggressive and more complacent and more convinced that there was, things like insurance that would cover and backstop and that they didn't have to worry about capital loss because someone would always step in, whether it was a central bank or a government. They'd throw taxpayer money at it and it would solve the problem. So what it engendered was this intense period of reckless risk-taking.
Moral hazard, yeah. The Dukes of moral hazard.
Yeah, and if you look at the European banking structure, so as a comparison, Cyprus had most of the money that was in the bank, 84% of the capital that was being used for banking activities and loans and making risky bets per se, was from depositors. You only had 16% of the capital in the Cypriot banks was actually from, quote, investors. So that leaves you extra vulnerable, of course, when the depositors decide to pull their capital. And the same goes for many other institutions over there. They're not alone. I mean, even, places like Slovenia, Belgium, Spain, they all have a great proportion, 70% more of their capital structure is that short-term deposit base. So everyone is really at risk of a bank run. And so that's why you see these draconian measures come in where they shut the thing down and say, you get to take whatever, 30 euros a day when we do start to reopen. And that may sound, I get a kick out of the CNBC crew because they're all saying, geez, so that was a non-event. Cyprus is, they shut that down.
All right, on to the next. Next disaster.
What happened is they've literally bankrupted thousands of legitimate small businesses who cannot function because their payroll accounts and their supplier accounts were frozen in this fiasco, and they now are not able to get out enough capital to make their business function. So, they've now effectively decimated the economy even further, which will necessitate another round of emergency something, or else an admission of truth and having to actually leave the euro.
Oh, that won't happen. No truth. We don't have any room for truth. In fact, on jugglingdynamite.com, you had an interview. What was the guy's name? Saying, what was his name? Now I have to remember because I go to your blog a lot because I know you're going to pick up stuff. The bailout guy. Yeah.
Yes. So Lee Bushheit, yes. So
yeah.
He's a guru. I think it's ironic. He helped to structure the architect of the Greek bailouts. So now he knows where the dead are buried, frankly. And he's saying, the situation is that it's a knock-on effect. It's like you were saying with once you start bank runs, you have to do something to step in and backstop the confidence because then everybody panics and wants their money. That's how you get into a market crash. It always happens that way when it comes to the stock market, as an example. Everyone's complacent and confident and feeling great until all of a sudden, something turns, and then everybody's in a panic to try and get their money back. So,
you only want your money back when you think you can't get it. If you think you can get it, then you're happy to leave it there. Everything I learned about banking, I learned on that show, the Beverly Hillbillies. Do you remember that show?
Yes.
Because Jeb Clampett was the biggest depositor at Mr. Drysdale's bank in Beverly Hills. And when he'd get upset or Granny would get upset, they'd start threatening to take their money out. And that's all you need to do to get a banker to look for the highest floor on the highest building because he wants to jump, because once the bank run happens, he's ruined. And somehow they would always work it out. But that was before the Fed would just write a check and cover everyone for everything, because that in the U.S. and Canada, they cannot afford under any circumstances to allow confidence to ebb in the least amount. So yes, in theory, it's nice to say that the big depositors will take a haircut. In reality, they're going to print whatever is necessary to stop the system from imploding. And if that means hyperinflation, well, choose your poison.
Yeah, I suppose that's possible, but I actually think, and again, my rationale for why the Canadian government put in this reference to bail-in provisions, they specifically make the link to the fact that they want to protect taxpayers from backstopping the financial system in a subsequent event in the future. So, I just think at some point they're going to be, there's a limit to how much money even the central bank can print to try and backstop a system like this. And so what I thought was productive in Cyprus was not that the rich basically got the heads up and front run the thing and got capital out before the little guys, but what I thought was productive was it reconnected the idea of risk with institutions and with the people who put their capital there. So you did see bondholders get huge losses, and I think that was a step towards reality, and I welcome it, frankly. I realize it could be nasty, and you have to be very worried about where your money is today. I worry about it all the time, but there is no purely safe place to put excess capital. If you put it in land, you have it. It can be non-productive, it can be non-producing, it can be highly taxed by municipalities who are also desperate for revenue. If you put it in a safe in your basement, that may be great for a portion of your wealth, but what about fires and robberies and all this stuff? So, it's very, I guess the less money you have, the less headaches you have over this. But the reality is the people in the world that have more than $250,000 of deposits or more than $1 million in savings with an investment firm are the ones that have quite a challenge these days, because it's not easy to find places to park capital when, as David Stockman was writing about on the weekend in the New York Times, you've got basically a world where markets are rigged left and right. There is no real self-sustaining capitalist marketplace today at work. Even in the housing market, which is made some nascent recovery in the last year in the U.S. and people are asking, Professor Schiller, doesn't that mean it's all good again? And he's saying, well, but if you look at the dynamics of who's buying, it's a lot of investment funds. It's not a lot of first-time home buyers. It's not a lot of the organic, process that we typically need to see to have a self-sustaining market move. And so you got to be worried about, once there was a quote from George Bush after the 9/11, and it really made sense to me. He said, I gave up free market principles to save the free market.
Yeah.
And I think
we had to kill the village to save it.
I think that's the fundamental flaw. People believed that they could sacrifice the principles to somehow save the system, but the system itself depends on those self-correcting mechanisms, those anti-fragile components to keep it strong. And so now we've got quite a mess.
That we do. And, boy, it's makes you wonder. It makes you wonder, doesn't it?
Makes you wonder how it's all going to resolve itself, and yet, I believe that it will, and I think innovation and creative thinking are always going to be in high demand. I think that stopping the drain of coffers out of your pocket for things like expensive energy, which we are in the midst of an energy revolution, not just because it makes sense to have people on lower cost, cleaner energy sources, but also because it'll stop the bleeding on the financial side to a large extent. I think a lot of those are the productive things that have to happen. Also, in North American financial institutions, just to go back to the prior point, we do have a greater buffer of investment, equity and bond holders in those institutions to buffer to a greater extent the deposit holders from losses, the way that they didn't have in places like Cyprus and Greece. So we do have a relatively stronger banking system. We do have relatively more protection, but I don't think anybody can afford to be laissez-faire or, your opening quote there from the Bible, don't worry about tomorrow because there's enough to worry about today. I get that. I love the idea of living in the moment, and yet if we aren't thinking about the future, if we're not investing in development and innovation for the future, or if we're not worried about what can go wrong in the future, that's how you get to the space we are right now, where everyone is amazed at how degraded the system became. Well, it's because no one was looking for the integrity of the whole, and everyone was looking about a quick buck.
Yeah, you got that right. And, yep, there's definitely problems, and diversification is one way to help control and manage risk and to see that you're able to live to fight another day, because if you've got $1 million, split it up into 4 banks, or it just needs to be in different people's names within that bank, different entities. So one's in your kids' names, one's in yours, the spouse. Then if you have a joint account, that's a different entity. There's a lot of ways of going about it, but if you've got tens or hundreds of millions, you look at government bonds. You look at that's the reason why Switzerland's debt is paying negative returns, and the same with Germany, because there is no bank that can provide that degree of quote-unquote safety.
And the interesting thing is the wealthy, 92% of the world's population, Kerry, has less than $100,000 of savings, okay? But there are 8% of the people in the world have more than $100,000 of savings, and a very tiny fraction have more than $1 million of savings. But basically, in the, again, during this period, as the rules and safeties were degraded and everything became unstable, the go-to position for many people was, well, put it offshore, or put it in a safe haven, or put it in Switzerland, or all these various things. What we've seen in the last few years is that also has been a bad idea for currency risk reasons, for political risk, and now for the idea that they're coming after. Various governments are literally deciding to ferret out people who have been trying to hide from taxation. So, there's risk in everything that you do, and I think that it pays to be aware and to try and do as many diversity things as possible, to not be a greedy PIG that wants to reach for the highest yielding thing at all costs, because the cost is the cost of the capital. And once you get it, like Nassim Taleb says, once you have wealth, you have more downside than upside. And I think that's something you really don't get until you start to amass some savings.
Yeah, you're quite on the money about that. And basically, Cyprus is the equivalent of the Cayman Islands.
Right.
The Cayman Islands, I think, are a little prettier, although you could argue about that, the Mediterranean versus the Caribbean. But the other thing was that one of the interviews on Juggling Dynamite said that it pretty much was a branch office of the Russian mafia, the Cypriot financial system. It became a captive of the Russian mob. Now, effectively, the EU has taken it back. It appears that many of the Russian oligarchs, KGB people, and other ne'er-do-wells got their money out before everybody else did. What a shock there. Who would think that people actually get inside information about these things? Anyway, Danielle, it's time to depart. JugglingDynamite.com. Go there. I do regularly. FinancialSurvivalNetwork.com. We're really busy updating the site throughout the day. Dozens of articles every day get up there. Danielle, we'll talk to you in a couple of weeks. You be well and stay warm.
Right.
Stay warm and dry. Okay.
Thanks, Kerry.
Hey, take care. When it comes to buying physical gold and silver, Regal Assets is the place to go. Did you know that you can use your existing retirement plan to invest in precious metals and it's 100% tax-free with Regal Assets? I hope you're seriously thinking about using precious metals in your retirement plan to help you beat inflation. It's so simple to use your existing IRA or old 401k to set up your precious metals retirement plan. Request your free investment kit today. It's so helpful and informative that it was recently featured in Forbes and Smart Money Wall Street Journal magazines. Get the latest info by calling toll-free 855-678-6620. That's 855-678-6620. Or visit regalassets.com and use the code Lutz. You'll save the setup fees and a whole lot more at regalassets.com.